Time now for the M&A Edge with John BINTZ of Valuation Research Corporation. Good to have you on the show as always.
Thanks, Angie.
So John is keeping tabs as to what's going on with the business climate for us. Today we're going to take a look at what's going on with interest rates with John. And John, what has happened ever since that Fed meeting where the Fed raised rates?
Yeah, it's kind of weird, Angie, because the 10-year bond has actually gone down as far as yield is concerned. So when the Fed raised rates in February, a quarter of a point on the short end, the Fed funds rate, the 10-year Treasury stood at 2.3. Today, it's at 1.87, and that's a couple months later. So as we look for signals in the economy of what's happening, inflation, deflation, growth, contraction, expansion, etc., the 10-year, the intermediate term Treasury bond, has actually gone down by 43 basis points, and the yield curve has flattened. So that's not the best for the economy. You would think that it would be linear, that the Fed would raise rates by 25 basis points, and the 10-year would go up by maybe 25 basis points. But it hasn't. It's gone the opposite direction.
And we should also note that it doesn't necessarily mean that money is rushing into the stock market.
Yeah, it hasn't. You know, maybe the money's on the sidelines right now because of uncertainty.
Taking a pause. Do you think this is a global slowdown signal here, John?
I think it kind of is. I personally think that there's some concern and there's some worry about a global slowdown.
Now, your company actually takes a look at company valuation. So where are we right now in the business cycle, John?
The business cycle, great question. So since 1945, we've had 12 business cycles from peak to trough. And the average time of a business cycle during that time period has been 70 months for that peak to trough. Today, we're at about 78 months. It's the fourth longest business cycle since we've had since 1945. In 2008, it was 90 months, and in 2000, it was 128 months, which is the longest it's been. So we're kind of at the tail end of the business cycle, and yet the growth, the expansion that we've had has been a little subdued. It wasn't the most robust expansion we had since the Great Recession in 08 and 09. But the business cycle itself is kind of getting long in the tooth. So that's another sign, another signal we want to watch out for.
What do you think that will mean for mergers and acquisitions in the market, John?
Well, a lot of it has to do with how much money's on the sidelines and where rates are going. So we've had a steady M&A cycle. We've had a steady deal flow and M&A flow, and we've continued to see that, and I continue to see that happening in the not too distant future.
John, always a pleasure. Thanks for coming on the show.
Thank you, Angie.